Welcome to today's session on CL4, the corporate law section. We have been discussing about the various areas relating to corporate law in our previous 3 lectures. Now today I am going to talk about the more internal management of a company. As you know, the shareholders are basically the virtual owners of a company. Even though a corporate personality is a distinct and separate person having the legal capacity just like a natural person, but made by the law to be a juridical person. The shareholders are considered as members of the company. Apart from the shareholders, the directors who are appointed to the office of director are meant to deal with the management and administration affairs of the company's internal management. So, shareholders and directors can be both together called members of a company. Then apart from that, there are also externally operating officers of a company. They are the secretaries, auditors of the company. They do not fall within the meaning of internal management, but their services as experts are obtained for the company for various affairs in the company. Secretaries are basically handling the legal documentation part that are required and for the interaction with the register of companies to send all the company particulars to the register of companies and also taking the relevant minutes of meetings, especially the board meetings and the general meetings of shareholders, the annual general meeting, extraordinary general meeting, and so forth. Then the auditors, on the other hand, are the ones like the chartered accountants dealing with the financial area, financial auditing of the company and providing the auditor's report, which is a very, very important element as far as the company is concerned, because it provides the much needed information for the shareholders of the company as well as the general public who may invest at a future time in such company. So the role of these individuals are extremely important for the existence of the company. Now before I come into the areas of directors, secretaries and management of a company, let me first of all deal with the registered office that a company must maintain as per the law. The company law in Sri Lanka require that every corporate entity that is incorporated and registered with the Register of Companies to maintain what we call a registered office. Now, there can be different types of officers in a company. However, on top lies the registered office, because that is the address that is given to the ROC that the company primarily exists in that location. Then below the registered address, there can be other officers such as the business place, then sub-officers of the company, and so forth. As per section 113 of the Act, Companies Act, every company shall have a registered office in Sri Lanka, which means that every registered company in Sri Lanka must have a registered local office within the jurisdiction of the state of Sri Lanka. But that does not mean that it can have another office overseas, but primarily there has to be a registered office in Sri Lanka. The same would apply for an overseas company that obtains the registration under the Sri Lankan law to have a Sri Lankan incorporated company. Then that particular overseas office or the company must have a locally registered office in Sri Lanka, which has to be fulfilled under the law of this state. So, the purpose of having this registered office in Sri Lanka is to which all communications and notices may be addressed by the ROC to that company, and the registered office of a company at a particular time is the place that is described in the register, maintained at the ROC as its registered office at that time. So, whatever the communications that may come from the registrar of companies, they are addressed to the registered office that has been given to the registrar of companies, as the registered office is located or situated at this place. That is why it is very important for a company to have a registered office, and it is only one address at a time. If the registered office of a company is at an office of any chartered accountant, now sometimes when someone incorporates a company, the company's registered office address can be inserted as the office of the chartered accountant who is associated with the company's financial matters, or the office of an attorney at law, a lawyer who is associated in the legal matters, or any other person, which means that is outside the real office of the particular company. Then when the registered office is at a chartered accountant's address or attorney at law's address or any other other person, the description of the registered office shall state that the registered office of the company is at the office of the chartered accountant, attorney at law or any other person, and the particulars of the location of those officers must be duly provided to the ROC. So, if a particular company has its registered office at its chartered accountant or attorney at law or any other person, this should be specifically mentioned in the relevant formats presenting to the ROC that the registered office of this particular company is located likewise, so that then the registrar knows that the address given as the registered office is not the real address of the company that may have its own operations, but its chartered accountants or attorney at law or any other person. So, there is no prohibition of having a registered office at such location, but specific instructions have to be given in such case. Subject to the company's articles and inclusion in the register, the board of a company may change the registered office of the company at any time. Now, a company generally has a board of directors. That is the main organ of the company that execute the managerial and administration work at the most superior level in taking all the decisions that are necessary for the company. In case of a private company, we can have a minimum of one director. In a public company, we can have a minimum of 2 directors. Whatever the number of the directors that may be, the directors consisting that number in the company is called the board. So, the board at any time can decide on the change of a registered address if it appropriate, and they should take cognizance of registering the registered office with the ROC through its company secretary, who will be attending to the legal and documentation with regard to secretarial practice of the company. So, the board can change the registered office at any time. Notice in the prescribed form of the change shall be, however, given to the registrar for its registration. So, whenever a change of the office address is affected, the registrar needs to be informed, and the registrar will take steps to renew the location of the registered office from time to time when when the registrar obtains such a notice, and the change shall take effect 5 working days after the notice is received by the registrar. So, after the registrar receives such a notification of a change of the registered office, the registrar will have to take effect that within 5 days from the receiving of the notice, the duly change of the registry with regard to the registered office be effected. Now, from that I also would like to touch upon the company records. In the company's management and administrative means, a company maintains different kinds of records. A company may maintain simpler to complex types and amounts of records depending on the company's functioning. A company shall keep the following documents at registered office. Now, what are these documents that are needed to be kept in the registered office? Now, as you know that the registered office is the main office of a company, as I mentioned to you before. All the main records of a company must be kept and maintained in the registered office. For example, the first one is the certificate of incorporation and the articles of the company. Certificate of incorporation issued by the ROC and the articles of association of the company are to be maintained in the registered office. Sometimes you may have seen in certain offices that at the entrance they, or at the secretary's room or a director's room, they photo frame the incorporation certificate and hang on the wall. So, likewise, the incorporation certificate to be kept in the registered office as always, and also the articles of the company are to be maintained either with the director, or if there is a permanent company secretary working within the company, then should be kept with such company secretary in office. Then the second category of company records to be kept with the registered office are the minutes of all meetings and resolutions of shareholders passed within the last 10 years. So, all the shareholder meeting minutes and the resolutions passed by the shareholders for the last 10 years up to now, up to the present time, the company has to maintain at its registered office. Then next, an interest register, unless it is a private company which is dispensed with the need to keep such a register. An interest register. The documents that evidence the various company interests that may have either as of a right or of a liability for the company, and these records are also kept as an interest register to be kept in the registered office. But however, with regard to a private company, generally the interest register is not maintained and there is no mandatory requirement for such company to maintain that and keep it in the registered office. Fourthly, minutes of all meetings held and resolutions of directors. Now, likewise the secretary, shareholders. Now, all the meetings of the directors, such as the board meetings or directors committee meetings, in all of those, the minutes and the resolutions that have been passed by the directors have to be kept in the registered office, and these should be for the last 10 years up to the present time be maintained. So, practically the need arises as to keep records of the last 10 years. So, when a company comes into 11th year, it can dispose of the records of the first year, so that from the second year onwards to the 11th year, which is the 10-year period, the records are available at the registered office. The fifth one is that the register of directors and secretaries. The register having the names and particulars of the directors and secretaries of the company should be kept. Copies of all written communications to all shareholders, including annual reports, also have to be kept. Copies of all financial statements and group financial statements for the last 10 years to be kept. Copies of instruments creating or evidencing charges and the register of charges need to be kept in the company, what we call the charges registry. Then the share register, the details of shareholding of the company, that would depict the present shareholding, whoever who has given up the shareholding must be maintained as a share register in the company's registered office. Then the accounting records for the current accounting period and for the last 10 completed accounting periods of the company also to be maintained. So, here the accounting records for the current accounting period. If the records are not made for a current period, it may be that the annual accounts that are tendered at an annual general meeting of this year plus up to the last 10 years. That would include then, in that case, the last 10 years plus this year. So, when it goes to the next year, then the first year can be omitted. So, from second year onwards up to the 12th year, the records are available. So, these are the company records basically required to be there at the company's registered office. They have to be there as of a requirement of the law. Why do we need these things? The main intention of having these records at the registered office is that whenever who has interest in the company, could be a shareholder, could be a director or any other person investing in the company, including the creditors as well as the officials of the ROC, Register of Companies, can at any time come and inspect these records request to have a look at these records. Obviously not for the strangers, but those who have either an interest in the company as a matter of being investor or a creditor, or the statutory interest that the officials of the ROC have in that company. So, those records are to be maintained in the registered office. There is no way that a company can say, sorry, we do not maintain these records in our registered office and they are elsewhere. The law prohibits a company to make such statement. The law mandatorily requires that these company records are available at any time at a registered office. Every director of a company is entitled, on giving reasonable notice, to inspect the written records of the company without a charge at a reasonable time, however, specified by the director. So, the director should have the access to inspect the company records at any reasonable time upon giving notice. However, a court or any application direct that the records be not be made available for inspection or limit the inspection of them in any manner it thinks fit, if it is not in the interest of the company or the director request in such is not connected to the matters requested for. However, if a director arbitrarily interferes in inspecting a company record that he is not permitted or it is not of his subject matter, the company can refuse that request. If such a director, for example, like forcibly require such a document to which he has no interest or relationship, then the company can seek the court intervention and obtaining court order prohibiting such director in inspecting or obtaining such record. A company shall keep the following records available for inspection in the manner by a shareholder of the company or by a person authorized in writing by a shareholder for that purpose, who serves a written notice of such intention to inspect the company. Now, in case a shareholder requests the inspection of a company record, the following company records should be made available for such inspection. And what are those company records? First one, minutes of all meetings and resolutions of shareholders. So, shareholder meeting minutes and the resolutions passed by the shareholders. Then copies of written communications to all shareholders or to all shareholders of a class of shares during the preceding 10 years, including the annual reports, financial statements and group financial statements. So, whatever the communications that have been communicated between the shareholders and all the including all classes of shares, and also including the annual reports, financial statements, and if it's a group of companies, then group financial statements for the last 10 years of the company's existence to be maintained, to be made available. Now, suppose a company has not existed for the last 10 years, there is no requirement as such, but for the entire period that the company was in existence, if it's less than 10 years, it's important that the company records are kept likewise. Thirdly, certificates issued by directors, such as share certificates or charges issued by the directors. Those are also to be made available upon the request, likewise notice being made by a shareholder or shareholders, and also the interest register of the company other than of private companies. A company shall keep the following records available for inspection in the manner by any person who serves written notice of such intention to inspect on the company. So, a company shall keep the following records available for inspection in the manner by any person, not specifically on a shareholder or director, but any person who is interested and permitted to do so. And what are they? The certificate of incorporation of the company, the articles of the company, if they are not the model articles available in the schedule of the Companies Act, the share register, the register of directors and secretaries, particulars of the registered office of the company, copies of the instruments creating or evidencing charges and the register of charges. Now, you all may wonder why such documents or company records should be made available for anyone who wants to inspect. Now, when I say the term anyone, it does not mean that the company should make available these documents or company records to every person or every stranger. The purpose of this particular provision is that whoever who wants to invest in the company they may require to have a proper understanding of the company affairs, how the company runs, who are the people in this company, members and so forth. So, they would obviously require for an inspection of the records mentioned here. So, this is the purpose, the very purpose of making these company records available for anyone who requests the availability of such records. While the principal register shall be kept in Sri Lanka, a company incorporated in Sri Lanka must have its principal register maintained always in Sri Lanka. The share register of a company may, if expressly permitted by the articles of association, be divided into 2 or more registers kept in different places with notice the registrar within 10 days of such decision. Now, some companies that are locally registered in Sri Lanka, but having overseas offices elsewhere in the world, may require that its company records, especially the share register, depicting the shareholding and names of the shareholders, the amount of shares that they have, the different classes of shares that they are having, be also available in such countries outside Sri Lanka. In such a situation, the company law allows such a company, on the request made by such company to the registrar of company, to let that company make available additional share registers that are obviously the same as what is maintained here in this island, to be kept also in other countries. But a company can do this only after the expiration of 10 days from the date on which such notice with regard to the multiple maintenance of multiple share registers are made to the registrar of companies. The annual return shall be completed within 30 working days. The annual return of the company shall be completed within 30 working days from the date of the annual general meeting, because the annual returns must be passed by the annual general meeting, AGM. So, therefore, after it is been passed by the annual general meeting, then within 30 working days, I will further clarify this term working days. So, within 30 working days, the company has to complete the annual return, which is signed both by a director and a secretary of the company. Annual report, annual return of the company. Now, here since we encountered the word working day, now what means a working day? Is a working day that statutorily been mentioned in this country. Now, we know annually we get the holiday calendar, statutory holiday calendar in Sri Lanka. Even now, yesterday I received a WhatsApp message with all the holidays approved by the government of Sri Lanka for the year 2021, next year. So, there depicts what are the public holidays, mercantile holidays and non-mercantile holidays. Based on that, a company has to consider what are the working days that they are statutorily obliged and that they are statutorily obliged to close, and also a company's internal working procedure that they may not work on certain days. Now, for example, now we know that Sunday is generally a holiday, Poor Day is generally a holiday, it is not a working day. Christmas is generally a holiday, not a working day. But here in this country, every ethnic or religious event of a certain sector, like for the Muslims and the Hindus, one of their festival days is considered a general holiday and the rest are non-mercantile. So, working day would mean that a mercantile holiday is not granted. So, in that case, even a Saturday is a working day. Every private company shall send to the register with its annual report, with its annual return. The annual return that I explained to you earlier, after the annual general meeting, within 30 working days, the company must send its annual return. And who is in charge of sending this annual return is the company secretary. The secretary of the company duly appointed. Now, I will be discussing about who are these company secretaries, but it is the company secretary that is obliged to send the annual return. And along with the annual return, the company shall also send a declaration signed by the directors of the company to the effect that to the best of their knowledge and belief, they have done all things required to be done by them. So, when sending the annual return, the directors must give a declaration to the effect that all the information provided in the annual return are to the best of their knowledge and belief, what the company had been doing, and also that they have done all things required to be done, because it is a duty of the directors to act likewise, that they have not committed an act of ultra vires, which I mentioned you on a previous day. And also, the company must send a certificate signed by a director and by the secretary of the company, a certificate to the effect that the company's annual return is submitted along with, and also stating that the company has not issued any invitation to the public to subscribe for any shares or debentures of the company if it's a private company. If it's a public company and if it has issued, then certificate to that effect. Then if the number of shareholders exceed 50 in a private company, we know that the maximum number of shareholders should be 50 in a private company, other than employees who are being made shareholders by virtue of of the employment. So a company can have, private company can have more than 50 shareholders, but proper separation of the classes should be provided, that the non-employed shareholders, non-employment shareholders should not be calculated to the maximum 50 shareholders number in the company. So suppose that if a company has, say, 28 shareholders of different class, another 30 employees, then the total is 58. Now in this circumstance, it is not considered illegal, because this is where the minimum of 50 must remain. The additional 30 here are those that are employed. So exceeding up to 58 is not an issue. But suppose that in a different situation, a company had 40 shareholders of different class, another 30 employees. We know that this is a proper denomination. Thirdly, if a company has 55 shareholders of various classes, another 30 employees, this cannot happen, because here the maximum number has exceeded. So therefore, if the number of shareholders exceed 50 in a private company, then that excess is, then the certificate of the director and secretary should be to the effect that the excess is due to the class of other shareholders, such as the employees. Every company shall keep at its registered office or at such other place as may be notified by the registrar, a register of its directors and secretaries as a part of the company records. Every company shall keep at its registered office a register of its directors and secretaries. So that is a mandatory requirement. Now, another type of records in a company are the accounting records. Now that interests you all more, because you all are students of the chartered accountants. And when you become an accountant, professionally qualified, chartered accountant, you are also eligible by virtue of your qualification to handle company matters for various companies that obtain your services. So, your primary duty is preparing and maintaining all the accounting records, but it is a privilege for you all also to be company secretaries and act as a company secretary also. But primarily, the accounting records are to be kept by those who are eligible and competent to handle accounts. Every company shall keep accounting records which correctly record and explain the company's transactions. So, now when you say company's transactions, it could be liquid transactions as well as asset transactions. Sometimes transactions can be just on record without a physical transaction of money or assets. So, whatever they are, the company's transactions may vary and will at any time enable the financial positions of the company to be determined with reasonable accuracy. So, it is the company's accounting records that provide a clear picture of the company's financial status, and therefore, this financial position to be assessed, the accounting records must be reasonably accurate and also enable the directors to prepare financial statements in accordance with the Act and enable the financial statements of the company to be readily and properly audited. So, maintaining financial records is not the only thing, they also have to be properly audited. So, the company law requires that the accounting records need to be maintained in a way that it fulfills the process of auditing these accounts and maintain these records in the company as well as to send with the annual returns to the register of companies. The accounting records shall contain entries of money received and expended each day by the company and the matters in respect of which such money was spent. So, this is a very careful procedure. Extreme scrutiny. Why is that? Because the company law is there to protect an innocent artificial person from the natural persons who are controlling that artificial person. That artificial person has no voice. That artificial person's rights are secured and maintained by the company law. So, that is why there has to be the transparency, especially when it comes to accounting records and a record of the assets and liabilities of the company. As I told you, the company may have accounting as with regard to liquid as well as with regard to the assets. So, the record of the assets and liabilities of the company. The debt of the company towards the creditors. If the company's business involves dealing in goods, now suppose that the company's main business or part of the business is with dealing with goods, such as a wholesale or retail business of commodities, then a record of goods bought and sold, except goods sold for cash in the ordinary course of carrying on a retail business, that identifies both goods and buyers and sellers and the relevant invoices have to be maintained. So, whatever the company buy and sell, the invoices both ways have to be maintained. Then a record of stock held at the end of the financial year, together with the records of any stock taken during the year, need to be maintained. You may have seen sometimes when we go to shops, they say the shop is closed for stock taking or stock verification. That is the process that they are conducting internally. Not only to determine what they need and what remain, but also they are statutorily bound by the company law to provide as part of the annual accounting records these statements. If the company's business involves providing services, now not goods but services, then a record of services provided and relevant invoices are to be kept. Now, for example, if a company is involved in providing services such as professional services or some other, then the records and the relevant invoices with regard to the provisions of services rendered need to be maintained. A company shall keep its accounting records in Sri Lanka. Likewise, in other types of records, the company's accounting records have to be maintained and kept in Sri Lanka, so that anyone can see, anyone in the sense like I mentioned to you before, anyone having interest or the ROC having statutory power to inspect. However, where the registrar considers it not prejudicial to the national economy or to the interest of shareholders of the company, he may permit a company to keep its accounting records outside Sri Lanka. Now, if a particular company wants to keep its accounting records in another company, then this company has to first apply that to the Registrar of Companies. Then the Registrar of Companies' necessary approval needs to be obtained for this company to keep its financial records overseas. Now, when doing so, the registrar would also need a certificate from the Inland Revenue, because when a company can or is given the opportunity to maintain its accounting records overseas, there is always the possibility that the company can evade taxes. So, for that reason, when giving authority to do so, the registrar of companies may require the fulfillment of various means, especially with regard to obtaining a certificate from the Inland Revenue. However, this is a possible situation. To obtain these records, to obtain the permission in keeping these records outside the waters of Sri Lanka. But it is not possible for a company to keep these records by its own wish. Always the company has to obtain the permission of the registrar of companies to do so. If the records are not kept in Sri Lanka, the company shall ensure that the accounts and returns of the operations of the company disclose with reasonable accuracy the financial position of the company at intervals not exceeding periods of 6 months. So, every 6 months the company to maintain its financial status. If the main account records are not available in Sri Lanka and by permission granted by the registrar to keep them outside Sri Lanka, and will enable the preparation in accordance with this act of the company's financial statements and any group financial statements if it is a group of companies, and any other document required to be maintained under this act are sent to be kept at a place in Sri Lanka, and notice of the place where the accounting records and the accounts and returns required shall be given to the registrar. So, whenever the registrar requires certain things, certain information, the registrar can always inform that particular company to submit such financial statements. This is a kind of a financial check, accounting check conducted by the registrar. Whenever the registrar has a suspicion that the particular company in Sri Lanka is trying to defraud the national economy or its tax regime, then the next important area is on the meetings and annual general meeting of a company. Company generally has different types of meetings. It could be for a general decision to be taken by shareholders or by directors, a specific matter to be discussed and decided by shareholders or directors or even both parties together, and then the board meetings, then annual general meeting that happens once in a year, and extraordinary general meetings which may be convened for a specific purpose of high importance for the company's prevalence and existence. So, in any of these meetings, the company records are maintained, especially by the company secretary. As per section 133 of the Companies Act, an annual general meeting of the shareholders to be held once in each calendar year. That is where the directors of the company will convene a meeting of the shareholders to inform the shareholders as to how the company has proceeded from last year to this year. So generally, such an annual general meeting is chaired by the chairman of the company, who is in fact a director, and the company secretary will be helping out in taking all the minutes and the necessary matters pertaining to the agenda of the minutes. Then the shareholders of the company are the participants at the meeting that the board will unveil, the board of directors will unveil how the company had been performing throughout its existence last year and what important decisions need to be taken as per the agenda of the annual general meeting, so that the shareholders obtain a proper and general understanding of how the company's affairs have been conducted. So this annual general meeting, as the name suggests, is one meeting per year. As per section 133, it shall not be held later than 6 months after the balance sheet date of the company. So what is this balance sheet? In our country, there are two types of financial years as the companies consider. Some companies consider their financial year as running from 1st of January to 31st of December. Some companies consider their financial year runs from 1st of April to 31st of March. Now, by the end of a certain financial year, the financial statements, secretaries' records, and all other necessary matters are to be concluded so that the company can go for its annual general meeting. So upon the realization of such a final date or close or the ending of such financial year, the annual general meeting needs to be held, and the law requires that it is not later than 6 months from the balance sheet date of that company. So which means that if a particular company's financial year ended on the 31st of December, then AGM should be held before June, before 1st June, 6 months. If it is 31st of March, then from there, within 6 years, it needs to be held. And also, no AGM shall be convened later than 15 months after the previous annual general meeting was held. So, there are two circumstances. First circumstance is that within 3 months, within 6 months from the balance sheet date. So, balance sheet date within 6 months you have to hold the AGM. Also, second position is that it shall not be held at any date later than 15 months after the previous AGM was held. So, suppose that for example, the previous AGM was held say 1st May 2020, just to take an example, then the next AGM should be held on or before 15 months is lapsed, which means 2021, by 2021 30th of April it will be 12 months, May, June, July, August, 12, May, June, July. So, which means that before 1st July, I take this as 2020, so 2021, before 1st July 2021, the next AGM must be convened. Either you have the AGM, as I mentioned, showed to you first, or the maximum length would be in the second circumstance. If it is the first AGM to be held in a company after incorporation, it is the first AGM to be held, then it shall be held within 18 months of its incorporation. So, if a company is incorporated on 1st February 2020, then this company's first AGM must be held within 18 months, means up to 1st February, 31st January there will be 12 months, February, so there are 6 more months, February, March, April, May, June, July. So, before 1st July 2021, the AGM has to be convened. If this is a company incorporated on this date, not an existing company. For the existing companies, you have to set the AGM as I mentioned here. But if it's a new company, newly incorporated company, you can go up to 18 months for its first year to be completed prior to the AGM. Where default is made in holding an AGM, the registrar may, on the application of any shareholder of the company, call or direct the calling of an annual general meeting of the company and give such ancillary or consequential directions as the registrar thinks expedient. Now, if the company directors fail to hold the annual general meeting as of the law, as I have cleared out here, then any shareholder of that company can inform the registrar of Companies that an AGM has not been convened as per the law, so that the registrar thereafter can take steps to hold the AGM under his directions, powers, general powers, ancillary, whatever, consequential directions that the registrar may explicitly provide. The directors of a company shall, on the requisition of shareholders holding at the date of the deposit of the requisition shares, which carry not less than 10% of the votes which may be cast on an issue, forthwith proceed duly to convene an extraordinary general meeting of the company to consider and vote on the issue, to be held 15 days after the requisition is deposited and not later than 30 days. Now, this particular area deal with regard to convening of a extraordinary general meeting, what we also call in abbreviation form an EGM, extraordinary general meeting. How can an extraordinary general meeting be convened in a company? This is what I explained just now, that when the shareholders holding shares of the company having not less than 10% of the votes, shareholders who collectively or singularly having more than 10% of the shareholding in the company can give notice to the directors requiring an EGM be called. And for what? For a specific purpose, that such notice of calling for an EGM specifically mention as the purpose for which the EGM is called. So, technically, agenda to be served regarding an EGM should unveil the purpose for which this EGM is being called. And it is when such a EGM is to be called, it should be held between the period 15 days from the requisition is being deposited by the shareholders to the directors of the company, and not later than 30 days. So, within a time period running from the date of deposition of the requisition, a 15-day breathing period is given, so that the directors can act upon to call for the EGM, and from there onwards they have a maximum of 30 days to convene this meeting. So, simply from the date of the disposition of the requisition, days within which notice to be given of the EGM. So, It is the deadline for the notice, and another 30 days. So, here it is 30 days, another 30 days, which means that totally from the date of deposition of the requisition, it can have 40 days, 45 days maximum that EGM is held. So, suppose that the requisition, the deposition of the requisition was made on the 1st May 2020, notices have to be dispatched before 16th May 2020, and the EGM should be held from here onwards 30 days. That means we have to calculate from 16th May, May has 31 days. So, which is 15 plus another 15, which is then 15th June 2020, the EGM to be held. Example. The requisitions shall state the issue or issues to be considered, as I mentioned, the main subject matter for which the EGM is called by the shareholders and voted on a meeting, and also that the shareholders having that over 10% of shares collectively have taken a joint meeting at which a decision has been arrived to hold this EGM, shall be signed by the requirements and deposited at the registered office of the company, so that the shareholders take this decision either collectively or singularly. If it's singularly, then that particular shareholder can deposit that requisition. If it is a collective means, then it has to be signed by all those who are in favor of this requisition and be tendered to the company, the registered office of the company. Any provision of a company's articles shall be void insofar as it provides for the calling of a meeting of the company other than an adjournment meeting by shorter notice. So, if shorter notice is being given not only for EGM but also for any other meeting like AGM or general meeting, the company articles provide any shorter period than what is statutorily provided under the Companies Act, then the articles will be void for the mere reason that it has violated the statutory law, the Companies Act, as per the durations provided by the Act. Which means that in case of an annual general meeting, 15 working days notice in writing is necessary. In order to have an AGM, the company must give 15 days notice to its shareholders that an AGM will be held on such a date. In case of a meeting other than annual general meeting, or a meeting for the passing of a special resolution, then 10 days, 10 working days notice is sufficient. AGMs 15 days, EGMs like here, and for any other meeting, special that passes a special resolution in that meeting to be called, then 10 working days notice in written form in the case of a company other than private or unlimited company be served. Any company which is not private or unlimited. And 5 working days notice in writing in the case of a private or an unlimited company. So, any company other than private or an unlimited company, you need to give 10 working day notice. In case of any private or unlimited company, then you need to give 5 working days notice. Now, we are moving into company resolutions, which are also another part of company records, but these are not just ordinary records. Resolutions means that the more important, the more strategic decisions of the company are being taken by way of resolutions. So, company resolutions play a major role in a company's existence, because they are not ordinary decisions of a company. When decisions are made based on company resolutions, they have a much bigger weight. As per section 143, a resolution shall be a special resolution when it has been passed by a majority of 75% of those shareholders entitled to vote and voting on the question, at a general meeting of which not less than 15 working days notice specifying the intention to propose the resolution as a special resolution has been duly given, provided that shareholders with not less than 85% of the total voting rights at a meeting, a resolution may be proposed and passed as a special resolution at a meeting of which less than 15 working days notice being given. Let me clarify that further, but however, there are mainly 2 kinds of resolutions that can be passed in a company. One kind of resolution is called the general resolutions, ordinary in meaning, ordinary resolutions. The second kind of resolutions are called special resolutions. Now, what is the procedure in passing a special resolution? Special resolution. In order to pass a special resolution, either you need to get majority of 75% of the shareholders, 75% of the shareholders voting with a voting right, and they have with a 75% shareholding, these shareholders have raised a certain issue or question, or that at a general meeting of which not less than 15 working days notice specify the intention to propose the resolution as a special resolution has been duly given, and also a notice has been dispatched with regard to the summoning of or bringing of a special resolution. Notice served with not less than 15 working days. Specifying the purpose of the resolution, which a special resolution has been duly given, provided that shareholders with not less than 85% of total voting rights at a meeting, a resolution may be proposed and passed as a special resolution at a meeting of which 15 working days notice been given. So, a special resolution to be passed by the company has to be notified by at least 75% of the shareholders, and notice is being dispatched, plus notice is being dispatched to hold a meeting to pass this special resolution. The notice being served to hold this meeting (15 days prior to that meeting to be held), and provided that shareholders with not less than 85% of the total voting rights at a meeting, a resolution may be proposed and passed at a special resolution at the meeting of which less than 15 working days notice being given. So, suppose that this is one circumstance. The second circumstance is that if there is not less than 85% of the shareholders at a meeting giving notice of a special resolution, then even with less than 15 working days notice being given, such special resolution can be taken. Now, in the first circumstance, you need to have 75% shareholding plus at least 15 days to be given. But in the second circumstance, if there is 85% shareholding, at least 85% shareholding, then less than 15 days of notice would enable the calling of a meeting of the company to pass such a special resolution for a issue that the shareholders may have to resolve. At any meeting at which special resolution is submitted to be passed, a declaration of the chairman that the resolution is carried shall, unless a poll is demanded, be conclusive evidence of that fact. So, when a meeting has been called by the chairman to take a decision and pass a certain special resolution on a certain issue, the declaration of the chairman of the company that the resolution is carried, unless a poll is demanded in that meeting, be conclusive evidence of the fact that a resolution is being passed. Subject to the provisions contained in the company's articles, a resolution in writing signed by not less than 85% of the shareholders who would be entitled to vote on that resolution at a meeting of shareholders, who together hold not less than 85% of the votes entitled to be cast on that resolution, shall be valid as if it has been passed at a meeting of those shareholders. That is where a resolution is passed in lieu of a meeting, without obtaining a meeting. How to obtain a resolution? A special resolution can be passed without a meeting if at least 80% of the shareholders moving for such a resolution and passing that 80%, 85% shareholders who have the voting right. All these things are of voting rights, not those who have no voting rights, such as the preference shares or management shares, what we discussed previously. So, those who have the voting rights to this amount are the ones who are entitled to obtain such a resolution. Any matter for which special resolution is required, a special notice is required of such resolution. Now, is there any criteria to determine what is a special resolution or a general normal resolution is? Special resolutions actually are either being described in the articles of association of the company, or the questions or matters that are really going to affect the company severely, having greater effect. So, it is up to the company in that case that if this much of shareholders consider that a special resolution is required for a certain issue, then to obtain a special resolution of the company for that purpose. So, any matter for which special resolution is required, so then a special notice is required also of such resolution to be passed. The resolution shall not be effective unless notice of intention to move it has been given to the company not less than 28 days before the date of the meeting at which it is to be moved. Now, just take an example. Now, suppose that a company is intending to, or the shareholders intending to remove a director from the board. Now, such a action requires a special resolution. In such a case, this special resolution to be passed to remove a certain director requires a special notice to be sent of the convening of a meeting to remove such a director. Then, in such a situation, notice not less than 28 days before the date of the meeting at which is to be moved, and the company shall give its shareholders notice of any such resolution at the same time and in the same manner as it gives notice of the meeting, or if that is not practicable, shall give them notice thereof either by advertisement in a newspaper having an appropriate circulation in or any other manner allowed by the company's articles, not less than 15 days before the date of the meeting. So that in such an example, as I told you, 28 days of notice to be served. In case it is not possible to serve the notice on the required parties or party, then newspaper advertisement has to be published in newspapers that have much wider circulation in the country. Then with that, with not less than 15 working days before the date of the meeting, such publication has to be made, provided that where after notice of the intention to move such a resolution has been given, the company, a meeting is called for the date 28 days or less from the date of the notice. So, when can you call for the meeting is 28 days after such notice is being given. The notice, though not given within time required by this section, shall be deemed to have been properly given for the purposes thereof. So, if a meeting is called likewise after 28 days from the notice, then it is considered valid. Otherwise, if anyone breaching this particular provision in calling for a meeting to pass a special resolution, then such meeting calling for the passing of a special resolution is not valid. So, with regard to passing of a special resolution, generally could have followed this procedure, but later on we discuss about passing of special resolution where a special notice is required of such resolution, then to follow the later time requirement that I have discussed at the bottom of this slide. And these kinds of things are really of the nature, like I took in that example, when the shareholders require the removal of a director from his position or office. Now, we come to the next discussion, which is based on major transactions. Now, in a company, we may see that there are just ordinary transactions, minor transactions and major transactions. Now, before I talk about the rest, let us see what is a major transaction and what means and include a major transaction in a company. Major transaction means and include the acquisition of or an agreement to acquire, whether contingent or not, assets of a value which is greater than half of the value of the assets of the company before acquisition. So, if the company intends to acquire an asset that is greater than half of the existing assets of the company, such a transaction that the directors might be entering into is a major transaction. Then another one is the disposition of an agreement to dispose of, whether contingent or not, the whole or more than half by value of the assets of the company. If the directors going to take a decision to dispose of whole or more than half of the company assets, then that is a major transaction. Thirdly, a transaction which has or it is likely to have the effect of the company acquiring rights or interest or incurring obligations or liabilities of a value which is greater than half of the value of the assets before acquisition. So, the third one is where the directors are intending to acquire the rights or interest or becoming liable to more than half half or more than half of the existing assets to the value of half or more than half the existing assets of the company. Or fourthly, a transaction or series of related transactions which have the purpose or effect of substantially altering the nature of the business carried on by a company. Likewise, we saw in that Ashbury Railway Carriage Company case that the company's main power of business was to make railways and not to give loans. So, if the company wants to go into a different kinds of a business, then taking a decision of such nature also a major transaction as per the definition provided in the Companies Act. So, as per section 187, a company shall not enter into any major transaction unless such transaction is approved by special resolution. So, major transactions have to be approved by special resolutions before it is being decided to transact, and contingent on approval by special resolution, also contingent on approval by special resolution, consented to in writing by all the shareholders of the company. A consent, overall consent of the shareholders of the company in writing is obtained, or a transaction which the company is expressly authorized to enter into by a provision in its articles which was included in it at the time of the company was incorporated. A transaction which the company is expressly authorized to enter into by a provision in its articles. So, transaction that the company articles have provided that the company may enter into, which is very, very special and specific. So, that the major transactions of such nature, the company shall not enter into major transaction unless the transaction is of such nature, where it is approved by special resolution, or it is the it is contingent on approval by special resolution, or the shareholders have consented in writing, or the transaction is allowed under the Articles of Association. Only in such four circumstances a major transaction is valid when entered by the directors of a company. These transactions do not include, however, a transaction under which a company gives or agrees to give a floating charge over all or any part of the property of the company. So, these transactions do not include a transaction under which a company gives or agrees to give a floating charge or over all or any part of the property of the company, a transaction entered into by a receiver appointed pursuant to an instrument creating a floating charge over all or any part of the property of the company. The other one are a transaction entered into by an administrator or liquidator of a company. So, these are the transactions that do not fall within the major transactions, because these are transactions that are really major in nature, but these fall outside the purview of the directors taking a decision of such nature to enter into such a major transaction. Now, a company is managed by the directors in particular as the superiors of the company's administration. So, these directors have the power of management. So, when you look at the powers of the management as per section 184, subject to the provisions contained in the articles of company, the business and affairs of a company shall be managed by or under the direction or supervision of the board of the company. The board, as I mentioned to you previously, consisting of the directors. The board of the company shall have all the powers necessary for managing and for directing and supervising the management of the business and affairs of the company. By virtue of the articles of association, the board of directors have these powers. Subject to any restrictions contained in the provisions of the articles of the company, the board of a company may delegate to a committee of directors. So, sometimes certain subject matters are not entirely attended to by the board. The board can have subdivisions, what we call the committee of directors. Now, take an example such as the financial management. Say the board consists of 10 directors, out of which 2 directors are accountants. Let me draw this. Board consists of 10 directors, out of which 2 are accountants, 2 are lawyers, 3 are entrepreneurs, business entrepreneurs. So, we have 4, 7, then we say we have another 1 professional engineer, 1 professionally IT person, and 1 who may be just a investor, who is also in the board. So, altogether 4, 7, 8, 9, 10. With regard to the financial matters, they may the board might have a finance committee. Let's say that one of these entrepreneurs is the chairman of the board. So, in this finance committee, they might decide that these 2 accountants together with the chairman represent in such a committee. So, depending on the decisions taken by the board, these committees can be set forth by the board, putting different qualified people and delegating the board powers of the board to such committees. Subject to the restrictions contained in the provisions of the articles, however, the board of a company may delegate to a committee of directors, a director or employee of the company, or any other person, any one or more of its powers other than its powers under any of the sections of this specified in the 6th schedule. A board that delegates a power shall be responsible for the exercise of the power by the delegate as if the power has been exercised by the board, where the board had reason to believe before the exercise of the power that the delegate would not exercise the power in conformity with the duties imposed on the directors of the company by its act and the company's articles, or the board has failed to monitor by means of reasonable methods properly used the exercise of the power by the delegate. So, these powers that are being delegated to these people in different committees, it is considered that they have the powers vested by the board to full and completely work in such environment for the benefit of the entire company. So, with that, I conclude today's lecture, and on the next day we will discuss further on the company directors, which is a quite wide subject area. So, I intend to adjourn my lecture today and then to start and continue the next areas on the next day. Thank you very much for listening, and I hope that you have gathered a fairly considerable good knowledge of the areas of company corporate law under CL4 that we have discussed up to now, and we will be expanding our knowledge in the further lectures to be conducted. Thank you very much.